Welcome to Subramani. Every asset gatherer and every good fund manager tell you one thing, that investments are good in the long run, therefore you will make money. So if you were in my fund for the last 25 years, you would have made so much money. If you were in my fund for the last 32 years, you would have made so much money. Or even companies, somebody will tell you that if you had invested in Wipro in 1980, 10,000 rupees would be 700 crores, right? These are all stories which we keep hearing. If it is really so simple, why is it that enough people are not doing it? It's simple because it is simple to say this in hindsight. Now, it is even assuming you had put say 1 lakh of rupees long back, say 20 years back, it was a huge sum, or even if you had put less amount of money, for you it should have been a significant amount of money. You put 1 lakh into it and it became 3 lakhs or 4 lakhs. And your wife was sitting with you and you were speaking and you said, okay, I think we should remove it. Or your wife said, I think you should remove it. 1 lakh ka 4 lakh ho gaya in 2 years. It's a fantastic return. I think you should remove it. And you said, no, let's not remove it. Let it be there. Okay. And then that 4 lakhs became 3 lakhs. And your wife told you, I told you, markets are not one-way street. You have to remove when the markets are high and you have to reinvest when the markets are low. It was so simple. You didn't listen to your wife, so your 1 lakh had become 4 lakhs and 4 lakhs had become 3 lakhs and it stayed at 3 lakhs for say 18, 19 months. Then it again became 3 lakh 75,000. Would you be tempted to remove some money and say, okay, let me remove some money from this fund, more in case of equity shares? Suppose you put 10,000 rupees in Wipro and you had a lot of patience and it became 5 lakhs. Your wife said, let's remove this money and buy a bigger house, right? 5 lakhs would have been a big amount, maybe somewhere in 1985 or 86. And you said, no, this is a great share, let me keep it. 5 became 50 lakhs. Here than the words, 50 lakhs. And your wife said, we need a bigger house and blah, blah, blah. And you said, no, this company will grow. 50 lakhs became 30 lakhs. 30 lakhs again became 40 lakhs and your wife said, see, I told you we should sell, etc., etc. Now it's again become 50 lakhs. Within say 45 days of it becoming 40 lakhs, it became 50 lakhs. Would you now not be tempted to sell? The answer is yes, of course. It is easy for a fund manager or for a CEO to say you should have stayed invested. Yes, I should have stayed invested if I knew that this fund will do so well or this company will do so well. When I invested in 1978 or 78, I think this was an IPO, and in 1918 HDFC Limited, I thought this is a government-held company with some public shareholding. I thought it was PSU simply because the name was corporation. I did not even realize that it was a private sector company, right? Now it is easy to say, if I had stayed with all the shares, I had no clue who was Mr. H.T. Parekh, I had no clue who was Mr. Deepak Parekh. Forget knowing their track records. It was just, ye issue hai to IPO dalna hai kind of stuff. That is how we invested. And took a very long time, maybe 20 years, for it to be established in my head as a company in which you can stay for a long time. It takes a long time, right? It was in 1988 that I invested in Supreme, knowing fully well that it was a great company to stick around with because I had done research into that company. Now, every company does not give you such a strong signal. 1986, I bought Coromandel International. 1986, I must have bought Cholamandalam also, must be around that vintage. Right, so you know about a group, you know about the company, you know about the industry. Very rarely do you get enough evidence totally making you commit to a longish stay. So have I not sold Coromandel? I've sold Coromandel on the way, but I've done one thing, I've sold and bought it back. Have I not sold HDFC Limited on the way? I have sold. Have I not sold HDFC Bank on the way? I have sold. Please understand, HDFC Limited and HDFC Bank are completely different cultures. When you see them, you're not very sure that this strategy will work or this strategy will work permanently. You don't know whether these are permanent to hold kind of shares. It takes a very long time. Must have been 1994 when the IPO of HDFC came, or sometime in the 80s perhaps, when or 90s for Hero Honda, Infosys, all of them. It takes a very long time for you to be convinced that it is worth holding on permanently to some of these shares, and they create wealth, and they create more wealth than these funds. So is there something which I can tell you now that you buy and hold and don't worry about the day-to-day fluctuation, the coronavirus, etc.? There is only one such thing possible, that is a low-cost index fund. It is not a large cap fund, a large and mid cap fund, or a small cap fund. Nothing of that sort will work unless you are very sure that I want to do a 2000 rupee SIP in this fund. Why am I saying 2000? Because 2000 is not going to move the needle. It's not going to scare you. So you can tell your children also, I've started this for you, and I want you to continue this, growing it at 5% a year. So 2000, 2100, 2200, for brevity's sake, I'm not taking the power of compounding. So 2100, 2222 or 2340, or it will keep increasing. Your SIP amount will keep increasing, and you will stick around to that fund for a pretty long time. But even in the fund, at some stage, you are worried about the fund house competence and the fund manager competence and corruption at both fund house level and at the fund level. How do you know that these things are not happening? How do you know that this is a great time to get out? How do you know when the CIO changed, you should have got out or not got out? There is absolutely, it is easy to talk in retrospect saying, oh, it's long-term investing is good. Long-term investing is good after you trust the fund house, after you trust the fund manager, after you trust the management. For me, the criteria in the 1970s or let's say 80s was very simple. If it was an MNC, I didn't worry too much about the quality of management. So holding on to a Siemens, Cummins, Colgate, HUL, Nestle became easy, but became very difficult to hold on to Indian companies like even Carborundum, Coromandel, Supreme Industries, HDFC Limited. There was no valid reason to hold on. I mean, we've held on to Hindalco now as a family for 63 years, right? That's older than me in my portfolio. We just held on, and I don't think it's been a great performer. There have been very long periods of time when Hindalco would not pay dividend because the government of India under Indira Gandhi, I think, yes, under Indira Gandhi, had aluminium price control. So there was no dividends, maybe for 5 years, 7 years, I'm not very sure. Today, I don't know how I will react. Today, if I knew something like that, maybe I'll react differently. Today, I'm happy to sell off a commodity at a peak and then buy it back. I knew nothing. I just said, oh, it's paying dividend, it's the original share. I remember emotional attachment, GD Birla's signature on the share certificate. All those things were there. All that is part of the 63-year story, right? Today, everything is in digital form. How many shares of Hindalco do you have? You pick up and say 6,412 or something like it. Just a number. But it was not like this when I remember the share certificate. Tata Steel share certificate would be having JRD's signature, or I'm sure it was JRD's signature, and here it was GD Birla's signature. So all that was part of folklore. So that is how you held shares, and you held shares for a long period of time after you were convinced that this is a good group. But today I'm not convinced that the Tata Group has created enough wealth in the last 10-12 years. Maybe things are changing now. Maybe Tata Power was a good buy for me at 30 rupees, but it is not a share which you could have just bought and held. And I don't know whether people are wanting to do stories of what would have happened if you had bought Tata Power so many years ago. I bought Tata Power so many years ago. No, it's not created too much wealth. It has been terrible stretches when it has always paid dividend, but it's not been a great share in terms of creating wealth. It is the Tata Group, it is the infrastructure, it is power, everything has happened, but no, it is not created. I must have bought the share at 100 rupees. Of course, it was at that time it was a 100 rupee share, then it became a 10 rupee share, then it became a 1 rupee share. And it was available almost at par with a 7% dividend yield, right? So it is easy to talk this. I mean, you have to worry about survivor bias, you have to worry about hindsight bias, you have to worry about endowment bias. Because you hold it, it looks like a great company, but it may not be true. Maybe Nestle has created more wealth than Colgate. So at some stage, if I had sold Colgate and bought Nestle, I would have been much better off, right? All these things happen, but is it not selling Colgate? Was it a bad decision? No, maybe not. If I had sold Colgate and bought Hindalco, I must have done worse. But if I had sold in Colgate and bought Nestle, I could have done better. How do you know these things except in hindsight, right? So it is very difficult for a retail investor without too much of quality of advice available to know which fund to invest and how long to stay invested in those funds. It's not easy. I mean, I started investing, I think, in 2017 in the US funds. So 2017, 18, 19, 20, 21, fifth year of a bull run in US, and I have no clue when it will end. It will end when the printing press called Fed stops printing. So is Apple an attractive buy at a PE of 25? I think so. It's better than buying Hindustan Lever at a PE of 80, right? So it's very difficult to allocate resources and then say, oh, you should have held on. There is absolutely no evidence to prove that you could have held on because of pressure, peer pressure, domestic pressure, media pressure. Somebody would have given you the story. Like, for example, even if you had sold Wipro maybe in 2000, boom, you would have been much better off today if you had invested that money in some other large cap fund. So we don't have all these answers the day we are investing. We do not know about the quality of the promoter, about the quality of the fund manager. We have nothing. We are playing blind. When you're playing blind, you have to fold the cards at some stage, right? You cannot hold on permanently for blind, assuming it is the triple aces that you have been dealt with. Yes, God has been good. He deals you good cards, but assuming it is triple A every time you play poker, well, you're being had. Thank you.